Hello everyone. Today I'm going to explain a strategy that uses a combination of two indicators. This video is created for educational purposes only and is intended to demonstrate one way of analyzing market conditions. Please remember that trading involves risk, and using any strategy without proper analysis and risk management can lead to losses. So watch this video carefully till the end, as we have explained it in a simple way. First, we have added a few currency pairs to our favorites list. After that, we have set the expiry time to 4 minutes. Now, let's see how these indicators are applied to analyze each currency pair chart and identify potential market opportunities. This is the EMA 200. First, let's observe a few chart movements alongside it, so we can better understand how it helps identify the overall market trend. And this is the stochastic oscillator, using its default settings. Now, along with the EMA 200, let's add one more moving average. We will use this moving average whenever the two moving averages cross each other, as it can help us identify potential breakout or breakdown situations and shifts in market momentum. Here are the settings for the shorter period moving average. Now, pay close attention, because I'm going to show you the analysis process in a simple way. This is the overbought and oversold zone of the stochastic oscillator. When the oscillator reaches the upper zone, it may indicate that the market is approaching a potential downward reversal area. Likewise, when it reaches the lower zone, it may indicate upward reversal area. This gives us an initial reversal indication, but it should always be confirmed with price action and overall market structure. Next, we have the 200 EMA, which helps us identify the broader market trend. If the price is trading below the EMA, the market is generally considered to be in a downtrend. If the price is trading above the EMA, the market is generally considered to be in an uptrend. So far, we've completed about 50% of our market analysis process. Now, let's look at where a potential trade entry may appear. There are two conditions that I'm watching here. The first is when the EMA and the moving average cross each other. The second is when the price reverses direction by touching the 200 EMA without crossing each other. I will be prepared for either scenario if the setup develops. This is the first candle that is closed above the 200 EMA. Now, we need to observe where the next candle closes. If the next candle closes back below the 200 EMA, similar to what happened earlier, it may indicate that the move above the EMA was not sustained. However, that is not what happened here. The following candle remained above the 200 EMA, suggesting that the market may be establishing movement above this level. It's a breakout. At this point, we can continue monitoring the price action for further confirmation. In this case, we can see an upward crossover has formed, and it has occurred on a bullish candle. So now, we have just one question. Where should I enter? We identified the breakout with this candle. When the next candle started moving upward, it provided a potential entry area. However, because the price moved up quite strongly, I decided to wait for little reversal. As a result, I looked for a better opportunity and considered the following candle as my entry point based on the price action and overall chart structure. This was the setup after two indicators, EMA and MA crossover. Now, let's look at another scenario. When the chart changes direction after interacting with the 200 EMA without crossing both of the indicators. The same 50% analysis approach we used in the previous example can be applied here as well. Just follow the chart carefully and pay close attention to the next steps as we break down the setup. This is in overbought condition, so it may reverse to the downside, and chart is moving under EMA 200. That means it is a downtrend, and half of the analysis is done. Now, if the candle touches to EMA 200 and breakout doesn't happen, that means chart may move to the original position, that's downtrend. So the final question is, when to enter? Let's see. And if you have any question, you can ask us on Telegram or in comment box. Next, I'm going to explain another market scenario so that you can better understand how to analyze similar conditions. Whenever the EMA and MA cross each other, the crossover candle is often relatively strong and can move noticeably in one direction. Because of this, the following candle may sometimes show a short-term pullback or retracement. In this situation, I prefer to wait patiently instead of reacting immediately. I look for a clearer setup and a more favorable entry area so that my analysis remains structured and I can make a more informed trading decision. By practicing this approach consistently, you can improve your chart reading skills and become more confident in analyzing different market conditions. If you'd like to follow along, you can use a demo account for practice. The link is available in the description. If you have any questions, feel free to leave them in the comments or reach out to us on Telegram for analysis more. We'll be happy to discuss the analysis in more detail and help you better understand the concepts covered in this video. That's all for today's video. Remember, the goal is to improve your analysis skills through practice and disciplined chart reading. If you found this video helpful, don't forget to subscribe. Thanks for watching, and I'll see you in the next video.